DLocal just released their latest quarterly figures. It was a big miss on revenue, but a beat on EPS. Now, as you know, previously DLocal, whenever they reported their quarterly figures, the stock was either up 20-30% or down 20%. At the time of making this video, the stock is flat-ish. It was down 9%, just an FYI, it was down 9%. We're now up 0.77%. Year to date, the stock is still down 56%, has a market cap of $2.24 billion, forward PE 16.1 times, EV to sales in the next 12 months 1.7 times. This is a company that is quite profitable. Well, it was more profitable before, still profitable today, as you can see here. EPS 43 cents, expected to grow 51.5% in fiscal year 2025 and another 36.2% in fiscal year 2026. As for sales growth, that is expected to grow around 30% in fiscal year 24 and 25, and then 23% growth in fiscal year 2026. So, in my opinion, the reason why I still hold this, is because I think that once they're done with their investments, which is why it is hurting margins, once they're done with that, you will see the true profitability profile of this company. Now, there has been already some improvements in this quarter. So you will see quarter over quarter improvements, which is also why I believe the stock is not down anymore at the time of making this video. Maybe after the earnings call, things can change. I will add it in the pinned comment. But overall, I liked what I saw. I was expecting something worse, but there were some things that, shows me that things might be improving. There were also some things that are not improving, such as revenue not being up at all quarter over quarter. There is a reason for that. I'll explain in this video. It's still a risky position, let's say. That's why it's still small. But if it works out, I think it could potentially be a good win for me. That will only happen in the long run because these things do take some time. So, before jumping into this video, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll first start with the updated 2024 guidance. So this is the new guidance right here. As you can see, it has been lowered a little bit. TPV is lower, gross profit is lower, and adjusted EBITDA is lower as well. This was the previous year-over-year growth. So TPV was expected to grow 40 to 50%. It's still around that range. Gross profit, 15 to 30%. We're now going to get much lower than that. And adjusted EBITDA, 10 to 30%. Same thing here, much lower than that. Now, the main reason why gross profit and adjusted EBITDA are down or revised down are these growing local to local flows, in addition to the factors mentioned above in TPV, which is downward probability of volume ramp-ups, pipeline volume mix skewed towards tier 0 merchants that have lower take rates, and general expectations of weakening emerging markets currencies, such as probably Egypt and Nigeria. As for adjusted EBITDA, maintenance of investments in certain key long-term projects, supporting crucial long-term investments that enhance our value proposition and internal controls. Now, although I agree that in the short run, it's fine to take a hit on margins to invest for the long run, just like Adyen did, I do not want this story to drag on for too long. It's great you want to invest, fine, but these things shouldn't take more than 2-3 quarters or so. And so, looking at the main points, record high TPV in Q2, quarter over quarter profitability resumed amid impact of currency devaluation, merchant repricing, and continuing OPEX investment for future growth. So, TPV is up 38% year over year and 14% quarter over quarter. Over the long run, TPV is what is important in these types of businesses. Revenue is up only 6% year over year, but down 7% quarter over quarter. I'll explain just a second. Gross profit down 1% year over year, but we see a rebound, 11% growth quarter over quarter. Same with adjusted EBITDA, that's down 18% year over year, but up 16% quarter over quarter. So maybe Q1 is the bottom. As for the revenue decline quarter over quarter, let's say here, the decline was mostly driven by the currency devaluation in Nigeria and Egypt, despite the healthy TPV growth. And so we've got here the revenue breakdown by geography. And by the way, we can see that in Argentina, things are getting better and better each and every quarter. So what happens when you suddenly have better policies? Mexico is doing fine, Brazil is doing fine. The problem, as they said, is of course Nigeria. I mean, quarter one to quarter two, huge decrease here. Egypt, same thing as well. That's the risk when you buy something like DLocal. When it's still small, when you see these fluctuations, I mean, it also happened on the way up, right? From Q3 to Q4 2023, Nigeria and Egypt actually helped them. But now it's actually the opposite. Yes, right now these hits will happen, but as this company grows and diversifies more, these hits will become less of an issue. But as I said, TPV is where you should be focusing your attention on. So strong TPV performance across diverse verticals. Again, remittances up 82%, advertising up 17%, on-demand delivery, SaaS, SaaS is up 72% yet again. I believe last quarter it was already close to 70%. Ride-hailing 51%, financial services 33% up, and commerce 46% TPV growth year over year. Now, previously there was an issue that was mentioned and I agreed. It's the top 10 merchant concentration, right? Back here in Q4, that was the peak, 68% share of total revenue. Since then it has come down, Q1 65% and now Q2 62%. Okay, that's great if it continues like that, but on the other side, there was a slight issue in my eyes. This number right here, that net revenue retention rate, previously that was 129%, well, previously in Q1. Now, quarter over quarter, you're down to only 100%. New merchants, I believe, is more than last quarter, but existing merchants basically didn't added 1 million, that's it. That's not enough. That's not enough at all. Moving on to gross profit, again, a detailed description of what happened in each and every area here. This is much better than what we've got, I think, a year or two ago. So Brazil, gross profit, quarter over quarter growth of 7%. Mexico is down 11%, mainly impacted by key merchant repricing. Chile is up 11%, impacted by net benefit of fine recovery at cost line. Argentina up 48%, overall positive performance across different verticals such as commerce and on-demand delivery. As I said previously, when the new president came in, I said this is going to be a tailwind. Yes, it took, I think, a quarter and a half or so, but now we're seeing those results. As for Egypt, that's down 5% because of reduced FX gains due to devaluation, leading to changes in dual FX rate dynamics despite strong TPV growth. Nigeria is up 273% for gross profit, temporary FX dynamics in the market, which led to gains in foreign exchange. And so here again, you see the breakdown quarter over quarter and year over year. Nigeria, quarter over quarter, it's up by quite a lot. And Egypt is down a little bit. Where do we see the other differences? Not that much. Argentina, as we've seen, does well. Mexico is down a little bit. So overall, total gross profit now recovers from Q1, 63 million to now 69.8, but still down year over year. Now, as for the investments, so building the global team to meet our long-term growth ambitions, things are moving quite fast. I believe they added, since last quarter, 63 FTEs. It's up 197 or 23% year over year. This number also, the majority goes to technology and product. That's 43%. Previously, that was in the 30%, I believe. Sales and marketing was 18, now 17. So they really focus on, let's say, the important aspects. So yeah, the question here is the same. How long is this going to take, right? If it's going to take another 2-3 quarters, in my opinion, that's too long, right? If you want to invest in the short run, fine, do it in the short run. These things shouldn't take a year. So we'll see what happens. We'll see what gets mentioned during the earnings call. You should check the pinned comment. As for quarter over quarter adjusted EBITDA over gross profit margin improvement, that was driven by higher gross profit and balanced approach to expense management, balancing short-term and long-term opportunity. So we went from 58.4% to now 61.1%. You can see the same thing for adjusted EBITDA and operating profit. Year over year, we're down, but Q1 to Q2, we are going up. Adjusted EBITDA up 16% quarter over quarter, operating profit up 12% quarter over quarter. So hopefully this is the start of a trend on the way up. And so right now, looking at the graph on the weekly, by the way, we've been oversold for quite a while. Actually, we've been oversold since the end of May. So let's see what happens now. We did finish the day currently. It's a weekly candle. We are currently over the 20-day moving average. The 50-day one sits at $8.45 and the 200-day one sits at $12.62. When are we going to see $12 again? That's a very, very good question. But currently, after hours, the stock is flat. So overall, to conclude, the worst might be behind us. Yes, the guidance for the year was revised down. That's never a good thing, right? But quarter over quarter, we are seeing some improvements. So hopefully, maybe in Q3, maybe in Q4, they're going to surprise us and say, oh, actually, we exceeded our guidance, right? Lowering the bar, even though that bar was already higher before. So it's only an artificial beat or something like that. But yeah, you have to play the Wall Street game sometimes. But what I want to see is improvements quarter over quarter, and finally hearing when are you going to be done with your investments in the short run to benefit the company for the long run, because that is what is impacting the profitability profile of the business. Of course, from a revenue standpoint, has nothing to do with that, has to do with, well, the revenue mix where they are operating in. And right now they're still small. So Nigeria or Egypt, yes, can have a negative effect on their revenues. But as they grow, I expect that risk to come down and down and down. So that's about it for me in this video. Will I add? No. Will I sell? No. I'm happy to hold right now, and we'll see what happens 3 months from now. So that's about it for me in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.